Thank you very much. Good to see you. My name is Dariusz Futoma. I'm the managing partner of the Horwath HTL. But mostly we will have the presentation online, and warm regards to Murray and Dale that they help us to do it, and we are here to share with you some interesting information about the financing. The BGK, the state bank, has a lot of experience in the export financing, but they are focusing at that moment on Africa, and they choose 17 countries, and out of these 17, 7 are the top priorities, and mostly the East Africa, including certainly Kenya. We will have this online presentation. It's ready, therefore thank you very much, Dale, and we can start.
My name is Piotr Kuffel. I'm heading the International Expansion Office, as Dariusz has mentioned, in Bank Gospodarstwa Krajowego, BGK, Polish Development Bank. And today I will have an honor to present you shortly about the financing structure and possibilities, how we as BGK could support projects, hotels projects in Africa. But first of all, I would like to give you a short update about BGK itself. BGK is fully owned by the state. Last year we have 101 anniversary, so we have a very long history. Our main role is to support social and economic development of Poland. And what is very important, because we are fully owned by the state of Poland, we have the same credit rating as the state. So currently stable A- according to the Fitch. As a development bank, we belong to one of the fifth development bank in Europe. Our equity amounts more than 10 billion euro. As of the end of third quarter 2025. I mentioned about the BGK mission. BGK mission is to support Polish entrepreneurs. However, 20 years ago, Polish government decided also that this mission will be extended over the international transactions. That is why, together with Polish ECA, Export Credit Agency, we were appointed as the institutions responsible for the governmental program financial support for the exporters. For the Polish exporters, this program were extended a couple of years ago on also supporting the Polish foreign investments. As you can see, we have a wide range of the financial instruments which we can use to support Polish export or Polish investments abroad. Today, I would like to concentrate mainly on the two schemes, the long-term financing under the buyer's credit, which is dedicated to support export, and structured credit for financing of the international expansion of Polish companies. As you can see, we are already in 89 markets, also almost in 20 markets in Africa. And in the introductional speech, Dariusz has mentioned that we are currently as a BGK and KUKA, Polish Export Credit Agency, we are focusing strongly on Africa as the whole continent. However, we have some priorities markets where we are ready to provide direct financing, either under the export finance scheme or Polish investments. And of course, Kenya is one of the top priority market. As you can see, there is also nearby Tanzania, Rwanda. So those markets are very important to us. Regarding the potential financing structure for hotels projects, We, since 2009, we supported a couple of projects all around the world, either under the export finance scheme. It means under the export finance scheme where we have a Polish company as a general contractor. The investor is the foreign entity. And or the second option is development finance, where we have a Polish investor who has decided to locate its hotels projects abroad. Under both schemes, we have a Polish link. So either we are talking about general contractor or Polish investors. However, in both scenarios, the key terms and conditions are pretty similar. I will talk about the differences a little bit later. Here you can see that the senior debt which we are able to consider is maximum 60% of the project budget. The project budget which includes all related costs. It means the real estate, the construction cost, the financial cost or advisory cost. For a direct financing, the minimum amount is 6 million USD. It's mainly due to the transactional cost which the investor and the borrower need to bear when he shall prepare the documentation package. He need to hire the external advisory to prepare this documentation package. The repayment profile. The repayment profile is always adjusted to the operating cash flow presented in the forecast. The forecast which we where we based on the external market analysis prepared by the experienced advisory company, comparing to the existing numbers, existing hotels in area where the projects shall be located. But in general, the 15 years repayment profile is available in both scenarios under the export finance or development finance. I mentioned about the maximum loan amount. The equity, it means that at least 40%. However, this equity could be contributed upfront in two ways. Either by the pure equity injection to the special purpose vehicle responsible for the project, or as the subordinated loans provided by the investors to SPV. What is crucial for us that the subordination of these loans, it means that it can be repaid only in the terms after the senior facility, the senior debt is first paid. Financial covenants are typical for the hotel industry. So we are talking about debt service cover ratio. Usually it is above 1.3. Sometimes if we have a very good market, we can think about lower indicators. The loan to value and LTC, loan to costs, are similarly all around the world. So at lower than 60%. And in case we have under the repayment profile, the amortization schedule assumes the bullet repayment, which is allowed. We are also required the cash sweep mechanism. So from the cash at the end of the reporting period, we are dividing it between the senior lender and the investor. This part for the senior lender is treated as the mandatory prepayment portion. Securities as a standard for this kind of project. So we are secure ourselves based on the existing project mortgages. We are pledging the other essential assets, and we use the assignment of rights from the material agreements, including real estate insurance, including the franchise agreement or operating agreement with the external entity. Regarding the typical projects which are not located in Europe, we require KUKE insurance. KUKE insurance, so I mentioned that together with Polish ECA, KUKE, we are responsible for supporting Polish export and Polish investors abroad. This insurance covers commercial and political risk. The cost of this insurance depends on the few aspects. First of all, the country risk. Secondary, the tenor of the transaction. And third aspect, which is taken into account when the KUKE is calculating its premium, it is the general risk of the transaction. So we, as a bank, we can provide a separate financing for this KUKE premium. The KUKE premium, just giving you rough numbers, in case of countries which are rated by the OECD on the sixth category, it's around 12-15%, but for the entire financing period. So when we are talking about the 15 years, this is pretty comprehensive offer. Nevertheless, we are able to provide financing for this KUKE premium, which is consolidated at the end of the construction period and is repaid during the full operational period of the hotel. And the last, which is also very important, is debt service reserved account. Probably you have also met with this instrument. It should be put into a special blocked account by the investors at least 3 months before the completion date of the project. Regarding the documentation, we based in our international transactions on the LMA standard, English law. We, together with the investor, are choosing the external legal company which is responsible for preparation of the loan agreement and security documentation. Here we can see the typical structure under the buyer's credit, so export finance scheme. I mentioned about this SPV. What is important under this scheme is that we disburse money directly to the Polish exporter based on the typically monthly reports, external reports prepared by the technical advisor who is supervising on behalf of BGK and KUKE the investments. And based on it, and based on the confirmation signed by the investor and Polish exporter, every month we pay money on the account of Polish exporter. However, the obligation to repay the debt is on the SPV. Here is One thing which you have also need to be aware, under the export finance scheme, we are able to provide financing based on a fixed rate, based on a CRR. CRR rates are the rates every month settled by the OECD secretary, and they refers to the current pricing of the country bonds. So, for example, for 10 years financing and longer, current CRR for USD is 5.32% per annum. Of course, we add to this our margin. Typically, it's around 1%, but still, this is the fixed rate for the entire financing period. So for at least 6.3 years. Yes, Hess? There's a question.
No, you can continue.
Okay, so the next structure, of course, is where we provide financing for the investments where we have a Polish investor involved. In case we are talking about the majority shares, so at least 50.1% in the SPV should be owned by the Polish investors. Here we are not bound with the Polish exporter, so we are not looking for a Polish origin goods and services. You can choose whatever is more cost effective for such investments. However, we need to have a Polish link. Maybe one step back regarding the export finance scheme, because we have the experience in the export finance scheme where we supported the traditional constructions made by Polish companies, but also we provide financing for a modular construction. Modular construction could be very interesting to you. We have in Poland a couple of modular entities. Using the modular construction allows to speed up the entire construction process. So from our experience, it could speed up even for 1 year the construction period. This, as I mentioned, the development finance for foreign investments is eligible for Polish investors. We have experience providing financing to Caribbean islands in Turks and Caicos, to reconstruction hotel in Rome, and financing a hotel construction in Zakynthos in Greece. We have also providing such financing to a couple of transactions in UK, but also in Hungary as well. A couple of years ago, before the full-scale war in Ukraine, we also had such experience in Russia and in Belarus as well. What we need to assess the project. Here you can see the entire list. So first of all, a business plan prepared by experienced consulting company with all this market analysis. Of course, we need to assess the investor itself. So we need to meet all know your customer requirement. We also need to see the financial strength, assess and financial strength of the financial performance of the investor itself. To be frank, I have never seen the project which has ended within the initially assumed timeframes and within initially budgets. So we need to be sure that wherever such situation appears, and it appears very, very often, such investor has to be creditworthiness, has to have a capability to support a project with the additional equity. Financial model standard for the hotels projects based on the USALI standard. And what is also very important to us, we assess and we are able to support project only with only branded hotels. So we need to have external, well-recognized international brand of the hotel, and the operational company, which also is experienced in running the hotel. In case of export contract, information about this Polish entity responsible for the contract, for the performance of works. This should be a turnkey contract, so the Polish contractor should be responsible for the entire investor.
Piotr, sorry, we need to finish because our organizer is...
examples of our activities in...
Piotr, can you hear me?
Yep.
Okay, we need to finish because organizer has another tight schedule. And if you be so kind and share to the audience maybe one question from me, if I'm allowed. If the investor has all necessary documents proper prepared, for how long she or he or the company will wait for the loan from the BGK?
So the credit process, when we have agreed the initial term sheet with the investor, the credit process usually takes 6 to 8 weeks.
Okay, therefore, thank you very much for your presentation. We'll stay in touch, and I will try to help to the audience to explain a little bit more about your approach and how the Polish State Bank can support the development of hospitality in Africa. Thank you very much.
Okay, thank you very much. Have a nice day.